My colleagues and I are dialing in from Canberra, which is located on Ngunnawal country, where the traditional owners have been living and caring for country for at least 20,000 years. For those people who don't know me, my name is Jeremy Thomas. Some of you would have heard me a couple of weeks ago at the ETIS seminar. I've been in this agency for nearly 4 years now and been looking after the scheme audit and assurance team for around 9 or 10 months. Obviously with COVID, it's been difficult for me to actually get out and meet many of you, but I am hoping that in the new year, there'll be more opportunities for the travelling, and I do hope to meet many of you in the coming 12 months. Now, Julian Bishop, who is an audit expert, and he's contracted by the agency as an auditor, inspector and consultant, will present today's webinar. The webinar will run for about 40 minutes with extra time at the end of the presentation for additional questions and answers that may not have been dealt with during the presentation itself. We will record this webinar and publish it, including a transcript, on our website in the coming weeks. I'd ask that you keep your microphones muted during the webinar and your cameras off. You are, as I say, very welcome to ask a question during the webinar itself. Julian's very happy to answer questions as we go, but the best way to do that is through the chat box. If we need to get clarification on the question, we'll invite you to switch on your microphone. I've got Katrina Williams and Peter Crooks with me today, and they'll be available to facilitate the question and answer session. So why are we covering conflict of interest? Why are we having a webinar on this matter? Of course, I don't need to tell any of the people listening today that dealing with conflicts of interest appropriately and sufficiently is absolutely fundamental to the audit process. But in the current business environment, our experience is that auditors are facing more and more COI challenges than they have in previous years. There have been a number of occasions in which auditors have come to us recently asking for clarification or guidance on specific conflict of interest issues, and we very much encourage people to do that. And there have also been a couple of occasions where we become aware of a potential conflict of interest issue, and we've had to work with the auditor on resolving that as well. So that's the context of why we're doing this now, why we're doing this today. And I'd like to hand over the webinar to our presenter, Julian Bishop.
Thank you, Jeremy, and welcome everyone to the session. I hope you'll find it thought-provoking and helpful in really appreciating the significance and expectations around conflict of interest in the context of an audit. My overall objective for the session is to help you to walk away with a good awareness of the requirements around conflict of interest and their application to common issues, and also for you to have an appreciation of the importance of acting with integrity and doing the right thing in relation to potential conflicts. So my name is Julian Bishop, and I may have met many of you in previous auditor workshops run by the CER. I was previously a partner with KPMG and a Cat 2 auditor, and for the last 3 years I've worked for myself in the audit profession, and as Jeremy mentioned, performed a number of auditor inspections on behalf of the regulator. There's quite a lot of technical content in the materials that I have for you today, as the topic of conflict of interest is littered throughout many different standards and regulations. But I was keen to try and pull it all together for you. I'll not go through all the content in detail, but it's there to be a resource for you to come back to in the recording of this session that will be made available in due course. So let's start off with understanding what we mean by conflict of interest. And there are 5 fundamental principles that underpin ethical conduct for an auditor. And these are integrity, objectivity, professional competence and due care, confidentiality, and professional behaviour. And here, if we look specifically at the principle of objectivity, this is about exercising professional judgment without bias, without conflict of interest, or undue influence or reliance on things like technology and individuals. So essentially, conflict of interest is about not undertaking or being involved in an audit if the circumstances or relationships may unduly influence an auditor's professional judgment. And this may come from circumstances like financial interests, business or personal relationships, etc. And we'll cover more on this later. But before I do, I wanted to talk about the important topic of integrity, as often decisions around conflict of interest are not black or white. You can see a number of different scenarios on the screen, and we'll come back to these specific points later in the session. But I wanted up front just to acknowledge that when we're looking at any individual set of facts or circumstances, it's important to keep in mind this fundamental principle of integrity. There'll always be pressures that we face when making decisions around conflict of interest. Pressures like client expectations, meeting deadlines, hitting our own revenue targets. And we can often rationalise our decisions by believing our judgment is better than that of others. We can minimise the impact of our decisions, believing no one else will find out or be hurt. We can convince ourselves that the matter is immaterial and that everybody else does it. And we can also be afraid of the consequences, perhaps of losing a client or disappointing others. For example, if a team member was to disclose that they had a financial interest or personal relationship with an audit client. So when thinking about conflict of interest, decision making, it's not just about knowing what's right or wrong when something is identified. It's also having an awareness of the risk factors that may lead to potential issues not being identified, and also an awareness of the factors that may lead our own judgment to be impaired or influenced. One of the most effective safeguards can be to seek the advice of others that are not directly involved in the situation. Now, this not only helps you understand perspectives that may be different to your own, but it also helps to ensure your decision making is objective and free from these influences and biases. So when faced with these decisions, it can be helpful to ask yourself, is your behaviour consistent with the ethical or professional standards, especially around integrity? And does your decision reflect the right thing to do? And is it driven by responsible professional judgment? So having gone through that, around just the mindset and the fundamental principle of integrity, let's move on into what the relevant standards and requirements are, and how we can go about managing potential issues and the topics that you'll see on the slide. So you can see on this next slide that there are various sources of requirements in relation to conflict of interest and independence. And through the next series of slides, I'd just like to identify certain of the key requirements from these various sources. As I mentioned earlier, I don't intend to go through the detailed requirements in this session, but just provide an overview of some of the key highlights from these various different sources. And they're there as a reference for you to go back to as you see fit if you want to remind yourself of some of the specific requirements that are contained within each of these different sources. So the first standard to highlight is ASQC1, so Auditing Standard on Quality Control number 1. The key points I'd like to highlight from this standard are shown on the slide. But essentially, it's the need to consider independence and conflict of interest from the perspective of both the audit firm as well as the individual. This isn't just around individuals having no conflicts. It also needs to be considered at the firm level as well. And secondly, on the right-hand side, you'll see the need to establish specific policies and procedures around a number of different areas that you can see. Including communicating independence requirements to audit firm personnel, all the way through to monitoring of compliance. So these are specific requirements from ASQC1 that policies and procedures are established around all of these different elements. The next standard, ASA 3000. So a couple of key points to note from this standard at the top, where we're really talking about what are the preconditions before accepting an engagement, is that the auditor needs to be satisfied and have no reason to believe that the independence requirements as well as other ethical requirements will not be satisfied prior to engaging. And secondly, there's quite a long list of relevant ethical requirements with respect to independence that are contained within this standard. So specific rules and principles around a number of different topics that you can see here. such as long association with audit clients, gifts and hospitality, etc. So these are all related to independence that are coming from that particular standard. If we move on to the ENGA regulations, the regulations contain a number of detailed requirements around conflict of interest and independence in the particular subdivisions of the paragraphs that are shown on the slide. It also contains the definition of conflict of interest, which, as I've already mentioned, is highly focused on where it's saying that the auditor is not capable of objective and impartial judgment. So we should always see this concept of conflict of interest in the context of being able to exercise objective and impartial judgments. If you move on to the ENGA audit determination, there is also a section in there on independence and conduct declarations and other content around independence, but principally focusing on the need to issue this independence and conduct declaration and give it to the person who appoints the audit team leader, and that independence and conduct declaration covers the audit team leader as well as all professional members of the audit team. If we move on to the APES 110, so accounting and professional ethical standards, there are also content in there, and one point that I wanted to just highlight and draw out is that when we think about independence, this is this independence of mind and independence in appearance, which also links to the concept of perceived independence that I'll touch on later. So that's an important lens to apply to the concept of conflict of interest, is the perception as well as what you may think as being the reality. If we move on to finally APES 320, this highlights the need to have policies and procedures around communicating independence requirements to personnel and processes around identifying and evaluating circumstances and relationships that may give threats to independence. So all of is just into the sources. There is content in the standards and regulations that is directed towards conflict of interest and independence, and highlighted just a selection of the key points from those. So it's a very quick run through the various standards, and as I say, I wasn't intending to go through the detailed requirements and rules in this session, but just point you to where they can be found. But what is important is that the audit firm has policies and procedures that are mapped and aligned to the system, their own system of quality control, to all of these requirements. So this involves establishing specific policies across the various topics and detailing any required procedures and creating templates to facilitate compliance. And this is absolutely necessary if all audit engagements are going to comply with the applicable requirements. There need to be very clear policies, procedures and templates to facilitate that compliance. So let me move on next to the process around how we manage potential conflict of interest issues. There's a conceptual framework that's contained within the standards, which is really around initially identifying potential threats, then moving into evaluating them, and then responding to them through one or more safeguards, which can either eliminate the threat or reduce the threat to an acceptable level. So that's the essence of this conceptual framework of identification through managing to reduce risk. And you'll see on the slide just a simple example of how that might apply, where the audit firm provides tax compliance services to the audited body. The threat is identified and assessed to be at a moderate level, and a safeguard such as the audit firm personnel providing the tax services are not members of the engagement team, which is implemented as an appropriate safeguard in order to reduce the risk to an acceptable level. So that's just a simple way of just articulating that framework and how that applies through threats and safeguards into reducing risk. So I'd like next to move on to, when we talk about threats to conflict of interest, how can we try and categorize those threats? So there are 5 threats that are acknowledged in the standards and regulations around ways in which threats could arise. So there's self-interest, self-review, familiarity, intimidation, and advocacy. So let's take a look at what each of these mean and a few examples to help illustrate them. So the self-interest threat, this is the threat that financial or other interests may influence judgment or behaviour. So this one should be quite well understood, but it is a common one that arises. And there are a few examples that you can see on the slide there as to what possible threats could be and examples of possible safeguards. So this isn't complete, they're just examples there just to illustrate some possible examples that might fall into each category. The next one is self-review, which is really where objectivity may be influenced by previous judgments that have been made or advice that's been given to the audited body. Again, this is a common one that arises and often requires careful consideration as to really drilling into the facts and circumstances around what exactly was the nature of the advice, other engagement, and how that could potentially have some bearing or influence on the conduct of the audit. So the scenario of consulting services or advice being provided is also an area where perception can come in and be very important. Is the perceived conflict of interest is just as important here as whether there's actual conflict of interest. And we'll touch on this later, as well as on the point that you'll see on the slide there about advising corrections to the audited body. We'll touch on that when we cover off on some of the common questions. Moving on to familiarity. So familiarity is all around long or close relationships with the audited body. This is where due to that lengthy relationship, then potential for being too sympathetic to the interests or too accepting of the work and not as skeptical and not as challenging. So again, you can read the examples on the slide. There's obviously certain requirements that exist in the standards and regulations on specific timeframes for rotation. For audit team leader, for example, not to perform more than 5 consecutive Part 6 audits. These rules are contained within the standards and regulations, but they really should be seen as minimum requirements, and using the concept of familiarity really as the lens to look through these, just to see whether there's any potential conflicts that might arise. Intimidation is the next one, the threat that the auditor will be deterred from acting objectively because of actual or perceived pressures. This is going to be less common, but an example that you can see there on the slide is where there's excessive pressure for the audit to be completed by a certain date. That's potentially could be seen to be intimidation, and that could therefore also be acknowledged as being impairing objectivity and impairing judgments, and is something to consider there. And finally, advocacy, which is where the auditor is actively promoting the position of the audited body, is another one to be mindful of. And there's an example there that's shown on the slide where it's seen that potentially the auditor could be acting as an advocate for the audited body. So these are the 5 principles that really underpin some of the threats to conflict of interest. And so whenever we're looking at facts and circumstances, it's good to try and think of them in the context of one of these particular threats. I said I just wanted to touch on this actual and perceived independence. So you'll see definitions there on the slide, and I'm not intending to go through the definitions in detail, but perceived independence really is all around what the belief of the users may be. So it's important to see this in the context of what users might take away in appearance or belief. And the standards talk about it's important for the credibility purposes that users are satisfied that both actual and perceived independence has been achieved. And I think if you find yourself tossing up whether there is conflict of interest or not, then there's a good chance that users will perceive that there is. Let's cover what should be on the audit file. I think, as we know, the audit file should demonstrate clear documentation, particularly around significant decisions and judgments in the audit. And often these decisions around potential threats and conflict of interest are likely to involve significant judgments and decisions. There's various points on the slide that we should all be familiar with, as we know that there needs to be evidence on file of signing and dating these declarations, and having them all at the appropriate time is important. But one point that I just did want to emphasize is the last point that's on the slide about the evidence of threats being identified, evaluated, and the safeguards that are applied. So just going back to the previous example that we had, is there clear documentation on the audit file of this particular threat, the significance of that threat, the safeguard that's been applied, and the conclusion that that reduces the risk to an acceptable level. So I think when we're looking at good effective documentation, then trying to make sure that it's that is the thought process of identifying these threats and responding to them. It's good practice to make sure that that's clearly documented on the audit file. I also just wanted to just a brief mention of one of the sort of emerging changes in standards. So the standard, the international standard, which is International Standard on Quality Management, number 1, which is a new standard that has recently been issued and will replace ASQC1 in due course. Its effective date is December 2022, and essentially the focus has gone away from quality control to quality management, and the intent there is trying to make sure that there's more rigorous monitoring and documentation of the system of quality control and demonstrating that it has been actually complied with. So evidence of performance of each control. So I'd suggest that some progress should be made over the next 12 to 18 months in relation to the changes that are coming with ISQM1, so that by the time we get to December 2022, then there is compliance and the controls will have been effectively documented and evidence of the compliance by that point in time. So what I would like now is maybe just a bit of interaction. Jeremy encouraged you all to use the chat. So if we can just go through some quick fire questions, and if I could ask for you to please type into your chat your answers to the questions as we go through, and the answer should really be a simple yes, no, or depends. Some of the questions have got 2 parts, so we'll try and answer both parts, but it's really a yes, no, or depends answer. One of my challenges here is I cannot see the chat, as my screen has just got the slide on it, so I will just leave some time for you to answer the questions, and I can't actually see what you're answering at the moment. But the first question is an external expert, a member of the engagement team, and a flow on from this, do the independence rules apply? So just a few seconds just to think about that. If I could encourage you to type into the chat, yes, no, or depends to both elements of that question. Okay, I'll trust that some of you have put some responses in there. So technically, external experts are not members of the engagement team. However, the independence rules still apply in exactly the same way as they apply to someone who was a member of the engagement team. So from an independence perspective, then there is no difference in the need to comply with the rules. If we move on to the second one, how about the peer reviewer? Is the peer reviewer a member of the engagement team, and do the independence rules apply equally to the peer reviewer? Yes, no, or depends. Let's give you a few seconds just to type in an answer to that question. Okay, so the answer, again, would be exactly the same answer as to question 1. So technically, the peer reviewer is not a member of the engagement team, but the independence rules apply in exactly the same way as they would if that person was a member of the engagement team. All right, let's move into question 3. Is it a problem if I performed a consulting engagement for the audited body 5 years ago? Yes, no, or depends. So I'd suggest that the appropriate answer here would be it depends. Obviously, the specific facts and circumstances need to be considered in light of the self-review threat, which is the one that really we should be trying to see this in the context of. The relevance of the 5 years is there probably just to see around just drawing on the concept of the perception of independence. And the further away you go from the current times, then maybe the perception of independence diminishes. So obviously it's a depends answer to that one. How about the audited body has asked for my help to correct an error in the abatement calculation? Can I advise them of the appropriate correction to make? So how do we feel about this one? Yes, no, or depends? So here, I'm consciously saying that, can you advise, as an auditor, can you advise them of the appropriate correction to make? And the way that I've phrased the question was fairly deliberate, and I'd probably answer that question as a no, just because I've used the word advise. I think the key principle here is that clearly we're all looking to try and get to the right place with reporting, being appropriate in accordance, with the requirements. So that's the objective, is to make sure that ultimately the reporting and the calculations are done appropriately. But as far as this perception of advising them as to what the correction should be to make, I think we need to just see this in the context of the audited body has to take ultimate responsibility and ownership for reporting. And if there's any suggestion or indication of the fact that the response might be, well, the auditor told me that was the right correction to make, that's the place that we want to try and avoid. So I think that we need to see this as being helping the audited body in coming to the right answer, as opposed to advising them of what the correction should be. So let's move on to the next one. If I use someone for 2 hours for some testing, do they need to be independent? Where do we think we would land on that? Yes, no, or depends? So specifically put into this question to do some testing. So if there's any involvement in gathering of audit evidence or performance of audit procedures, then the answer to that question has to be yes. Then there needs to be independence in the same way as there would be for anybody else within the engagement team, the audit team, regardless of whether it's 2 hours or 20 hours. If they're involved in the gathering of audit evidence and the forming of conclusions, then they would need to be independent. So let's move on to the next one. Can all threats to independence be managed with appropriate safeguards? How do we feel about yes, no, or depends? Is it possible for all threats to be managed?
Sorry, Julian, could I just jump in for a second?
Yeah, please do.
So we're having some technical problems here. We have an interesting question from Sam for chat box. We would like to respond to that question, but we have to take it on notice and get a more detailed response after this webinar. So we are having some issues reading the chat box. I'm afraid I'm not an IT expert, so this will be a little bit of a struggle. So I'll leave it. I'll go back to you, Julian, and you can continue your conversation, and we will try to answer Sam's questions after the webinar. Thank you.
Okay. Peter, for that. And yes, even if we don't answer these specific questions now, then we'll take them on notice and seek to respond as appropriate. So the answer to question 6, can all threats to independence be managed with appropriate safeguards? Then the answer to that question should be no. There are going to be certain threats that cannot be managed with appropriate safeguards. For example, if the audit team leader's spouse was responsible for preparing the entity's offset report, then there's going to be no safeguards that are going to reduce the threat to an acceptable level, other than potentially changing the audit team leader. So there are going to be certain threats that can't be managed. How about the next one? Do I need written conflict of interest declarations at the start and the end of the audit? Do we think the answer to that is a yes, no, or depends? So these are declarations from the individual members of the engagement team, experts, peer reviewer. Do we need them at the start and at the end of the audit? So the answer I'd say to that one is it depends. And it really depends on what your firm's system of quality control requires. So when we're talking about a firm system of quality control, it is trying to convey how your firm wants to implement and execute on the requirements. So if the system of quality control that is being applied to that engagement requires conflict of interest declarations at the start and the end of the audit, then the answer to that question would be yes, because the individual firm's system of quality control requires that, and for compliance purposes, then that would be required. But if the individual system of quality control didn't require that, then there could be other ways in which you're satisfied that there is independence at the start and at the end through other firm systems, then it wouldn't necessarily be required. Question 8, do I need to be independent from the proponent and the agent? Do we think that that's a yes, no, or a depends? So the answer to that should be yes, you do. So there is a need to make sure that there is independence, financial interests, business interests, relationships, etc., from the proponent and the agent. Moving on to question 9, my partner's brother works for the audited body. Is that an issue? Do we think that that is a yes, no, or depends? So I think that if we're looking at the conceptual framework of trying to identify threats and evaluate them, I'd say that that probably is a threat that should be identified, but the evaluation could be on the basis that the partner's brother, their role is nothing to do or has no impact or influence on anything that is subject to audit, and therefore then the evaluation could be that there is no threat there that needs to be managed. But that would be an example of where I think that there is a potential for a threat to be flagged and identified and evaluated as being not a significant issue. And the last question, the deadline that the client has imposed for the audit to be completed is going to be very difficult to meet. Is that a threat to conflict of interest? And I think, just as I mentioned before, we're looking here to identify potential threats and to make an evaluation of those. If there is an indication, a suggestion that it is going to be difficult to meet, and that there is the potential that that could have some bearing on the objectivity and exercise of professional judgment, then potentially that could be a threat that could be identified and evaluated appropriately. Let's just move on to a case study, and I think in the essence of time, we'll just go through one case study here. So just a case study where we have Joe as the audit team leader for an ERF audit. And Joe is also a director of Taxperts, a small firm which offers taxation services. And Joe's audit firm has only a few staff members. And Taxperts is advising the audited body on taxation issues that arise from its ERF project. And the auditing and Taxperts operate out of the same office. So does Joe have any potential conflict of interest issues to consider here? So I'd say in the spirit of just trying to flag potential threats, then there clearly is a potential threat here. There's a potential threat around the issue of both self-interest and familiarity and potentially self-review. So I think flagging potential threats is what we're looking to try and and see here. So as far as Joe being the audit team leader and a director of Taxperts, then the self-review threat, is probably the most likely one, where there could be a threat that arises for any judgments that are being made as part of the audit that could be influenced by judgments or conclusions that are being provided as part of the taxation advice. Also, an example of how self-interest threat could arise, potentially if ACME is a significant client of Joe. It may well be that through the audit services and through the tax services that are provided, then ACME could potentially be a fairly significant client and high fee dependency. That may not be the case, but that's one of the considerations in terms of self-interest is level of fee dependency. So I think just trying to identify and flag some potential threats is really the starting point. Then trying to drill down into more of the significance of the identified threat. So if we just follow through with just the fee dependency threat, it could be if ACME only provides, say, 5% of fee income that is coming Joe's way, then it may not be a significant threat. Whereas alternatively, if they're providing a much more substantial proportion of fee income to Joe, then potentially there could be a significant threat that might need safeguards to be put in place. So I just wanted to finish with some actions that auditors should consider taking after this webinar. So firstly, as we've said, there's a number of different standards and requirements that we've covered at a high level. Just challenging yourself of how familiar are you with these detailed requirements from these various sources. If you've not looked at them for a while, I would encourage you to consider refreshing your knowledge. And in addition, if you notice some of the standards and regulations had quite recent revisions and updates to them. So it may be to just revisit the mapping of your firm's system of quality control to the particular standards as they exist today. As I say, some of them have had revision and also flowing through into the related templates. When were they last? Okay, well, I hope you can see the slides as well, which I have tried to share again. But I can just cover off the few points that were remaining if you can't. So the second takeaway was really just to try and have some focus on, how do you know whether the system of quality control is being consistently applied on all of your engagements? Is there any specific monitoring? Where do you see there might be some potential weaknesses or inconsistencies in compliance? And just to revisit this point on how do I know that the quality controls that I have created as far as the policies and procedures that I'm expecting, how do I know that they're actually being complied with? The next takeaway is there's a lot to get our heads around in this topic, and so how well do we think that your team, peer reviewers, and any external experts really understand the requirements and some of the points that we have talked through on this webinar. When was the last time that there was any learning provided to them? So just a thought, just around anything that might be useful, just to share from this webinar with others. And next point, I understand that the CER will be issuing some additional guidance on conflict of interest in due course. So just a flag there, just to read and consider that when it's available. And then finally, if there are any potential conflict of interest issues that arise, then please contact the CER to discuss them. It's probably an important step to do that and to flag potential issues. But keep in mind that ultimately it's the auditor's professional responsibility to address any issues. Thinking through those concepts that we talked about around self-review, self-interest, familiarity, etc. Thinking about independence and conflict of interest in appearance as much as in sort of actual context. Think about identifying the potential threats and make sure that that's documented. Think about evaluating each threat, whatever level you think that it should be recognized. Think about the safeguards that are appropriate to apply to those, and try to make sure that that's clearly documented on the audit file. So that was all that I wanted to cover, but I think, as Peter had indicated, that happy to take any questions that there might be now or on notice for Peter and Kat and Jeremy potentially to respond in the future. So Peter, I'm not sure whether you have any. There are any questions that have been added that you would like me to respond to, or if there isn't anything at this stage.
Hi, Julian. There was one question that was put in. I think we'll probably have to take it on notice because it's fairly specific, but an interesting question and we'll definitely be looking at. Apart from that, no, I don't see anything else for you. Unless somebody wants to pose a question now, then please feel free.
Okay, well, Peter, the slides will be made available and the recording for people in due course. So hopefully then that's provided some helpful direction on the topic of conflict of interest, showing you where the technical content of the resources are and some of the thought processes to apply. So I can see, Steve, Tyler, there are questions in the chat. Peter, I haven't been monitoring the chat. Is there anything that you wanted me to respond to, or do you think that we can just leave it there and you can respond outside of this webinar?
Sorry, Joe, I think we have to respond outside the webinar. My apologies to Steve and everybody else. Our technical difficulties are manifesting themselves in some strange ways, and we're struggling to keep control of things. So what we'll do is we'll go back through the chat after this event, check everybody's comments and questions, and then we'll get back to you, to all of you, with the answers as soon as we can. My apologies again for our technical issues. It's been an interesting challenge. Appreciate patience of yourself, Julia, and everybody. So yeah, from our point of view, I think we can wrap it up unless, sorry, there was another question just come in. Sorry, Sam Farr would like to know if an auditing firm consults on ISO 9001 quality to client A, is that a totally separate issue that requires or not a safeguard to be put in place if the firm is auditing that client also? I think I'll have to leave that one to you, Julian, because I'm not familiar enough with 9001.
No, and Peter, I'd say the same for myself. I don't want to say anything out of school. I'm not as anywhere near as familiar with the ISO standards as I am, with the actual auditing standards from the Auditing Standards Board. So I think we'd have to take that one on notice as well.
Thank you, Julian.
But I think it highlights, Peter, that people have got some specific questions, and as I noted in the sort of actions to take, just having connection with the CER to flag some of these issues. I would suggest that that's a good course of action if there are specific and detailed questions that people would like help with answering.
Sorry, we just had Adina has put in an interesting question. I'm sorry to sound like a parrot, but I'm going to have to take this on notice as well. Some of these questions actually are really interesting, and we don't want to just answer on the fly. We want to think about our answers and give a really well thought out response. So that's why, Adina, I'm going to take that question on notice and we'll get back to you. But I can guarantee we'll look at all of these questions and we'll give a response to you as soon as we can. Thank you. Okay. Thank you, Julian. Thank you, everybody, for participating today in spite of some unexpected challenges, shall we say. I think we can wrap that up now. If anybody has any other questions they'd like to submit to us, you can email the questions to us. And again, we will respond to them as quickly as we can. But thank you, everybody, for participating. And thank you, Julian, for keeping us informed, and for everybody for your great patience.
Thank you all. Goodbye.